All right. So, welcome to the Real Property Nurse. Today's guest is Mary Ann Cronin from WSFS. I always have a problem with WSFS. I don't know what it is. Mortgage. Today we're going to be dispelling some myths about mortgages, informing you all about some grants, and she's just going to be providing us with some really good gems about different things that you may not have known until you heard from Mary Ann.
Thank
Mary
you very much for having me. I appreciate it very much. My name's Mary Ann Cronin. I'm with WSFS Mortgage,
Ann.
also known as WSFS Mortgage, and we are a local bank. And our goal is to reinvest in the community, and that's my role with WSFS as the Community Reinvestment Act loan officer to provide grants and loans and programs to assist buyers.
Awesome. So, Mary Ann, how long have you been doing this?
I have been in the mortgage business since 1986, and I
Wow.
started in mortgage servicing, moved to mortgage processing, then underwriting a little bit, then in management for a few years before I stepped into this role as a mortgage loan officer in 1998. So I've
Amazing.
been assisting for about 27 years in this role, and it's a very rewarding role to
Mhm.
help buyers with every possible program that may benefit them.
Yes, I was so, excited about all the programs that you were talking about. Again, as I shared with you, I didn't know about some of these programs that you were mentioning, and I think it would be great for, potential buyers or anybody that's maybe interested or thinking about trying to get a mortgage, letting them know the resources that are available out here because there are so many. I think a lot of times it's just that we don't have the information. So you don't know what you don't know?
Mhm, mhm.
But so one thing you mentioned, one thing I always like to clarify for people is that credit situation. So, in terms of credit qualification with banks, does it differ from like just traditional mortgage lenders or not?
No, we're pretty much all the same. We follow the federal mortgage guidelines.
Mhm.
Most and then there are certain guidelines for programs. So
Right.
certain programs require a minimum of 620, but most lenders can still do financing if the credit score is less than 620. And
Mhm.
that depends on whether or not we get what's called an approval from the automated underwriting system. But
Okay.
for the most part, the banks and the other lenders follow federal mortgage guideline rules.
Okay. So it's not a stricter process. It's pretty much
No, it's pretty
the
much the
same.
same.
Okay. That's good
Same
to know.
programs.
Yeah, I always thought that the banks were maybe a little stricter or, a
Mhm.
little more stringent on, a person's situation and credit score. Um, in regards to other criteria to qualify for these grants, your income
Mhm.
is
So there
one of the big.
yeah, there are certain programs, um, I just recently found out that the WSFS grant and the
Mhm.
City of Wilmington programs does not have a minimum credit score.
Oh,
So those 2 programs can be linked to a credit score less than 620. The Delaware State Housing Authority program and the, other programs like the City of Dover, Newcastle County, and Sussex have a 620 score requirement.
and it's a
So
hard stop. It has to be 620, so not even
yes.
619, not
No,
something
it's a hard
below.
stop 620 median
Right.
score.
Okay.
But I just recently found out that the City of Wilmington does not have a minimum score, and the WSFS grant does not have, because I have a client in that situation today that we're
That's
able
awesome
to
to
proceed
know.
with financing with
Right,
those other programs.
right.
Um, but yeah, most programs have not only a score requirement, but also an income limit requirement. Certain
Mhm.
ones look at, there's a difference between qualifying income and household income. So qualifying income is just the income used to repay the note and
Mhm.
the IOU. So, for example, if you have somebody who just changed jobs, but they
Okay.
receive a bonus, I
Mhm.
can't use the bonus as qualifying because we don't have a 2-year history of a bonus at that employer, but
Okay.
the bonus income is going to be used for household income because it was received within the household. So some of these programs look at household income, which is all income coming in, alimony, child support, bonus, overtime, um, mother that lives with you receiving Social Security, or adult children that work.
Okay.
And then there's other programs where I can exclude all of that and just use the person who's signing the note,
Mhm.
that person in the household, their income only.
Okay.
So it's very important when I have a conversation with a client, the
Mhm.
initial conversation where we discuss how many people are in your household, what is the income of the other persons, just
Mhm.
so I know, can I exclude that income or do I have to include that income?
So if you're including that income, then that person has to go on the note, correct?
No, it's that person does not have to be on the note.
Oh, okay.
So it's, say if your adult child lives with you working,
Mhm.
that's counted, that child's income is counted for household income, but that child is not on the mortgage application.
Nice.
So that's something that, and there's restrictions with the
Right.
income. So each program has its own little unique guideline, and
Yes.
that's why
Mhm.
it's important to have that overall picture of what's going on in the client's household, what all income
Yes.
is, and how we are
Mhm.
going to proceed with certain programs.
Yeah, that's
And
great information. Mhm.
yeah, that's definitely, the income part is very important to make sure that we understand everyone in the
Yes.
household and what the source is. And that's even for the first front door grants that are coming out spring of
Right.
'26. They
Right.
also want to know everyone in the household, their date of birth, is there any income source, even though
Mhm.
we may not use alimony or child support for qualifying, but it is needed for the household income guideline.
Mhm.
So
Nice.
there's definitely a difference. And then we look at that, and we not only look at that, we look at the credit score, and then what my goal is to use as many programs as possible and
Yeah.
layer
Right.
programs.
Right.
So typically, I'm able to layer the Delaware State Housing Authority, their second loan program with the First Front Door program grants, or the City of Wilmington funds, or the Newcastle County funds. So I
Right.
am able to layer certain programs and be able to offer as much down payment and closing costs for the client.
And that is amazing. That is very amazing because I know, with my experience, I was told that I qualified for the department. I mean, the Delaware State Housing Authority program for medical professionals, and then I was later told that I exceeded the income guideline. I'm like, well, didn't you guys know that? Like, you have all of my information, you know.
Mhm.
So therefore,
And yeah,
mhm,
it does go through an income review with each of the program, like the Delaware State Housing Authority. So in that case, it was probably miscalculated as far as your income and what the state actually looks at.
yeah,
Usually they look at projected income, where
hmm,
they take your income and project it for the year.
okay,
And that income is sometimes different than your true income,
mm,
as far as, but now they've tried to also, they do a verification of employment for everyone
hmm,
to get a more accurate income number.
Mhm.
but, there is once the lender approves the file and reviews it, then
Mhm.
it does go to either the state or the city or the county program, and they do an income review also.
Okay.
So I'm sorry that that happened to you.
I know. That was yeah, $15,000. I'm like, "Wow." So,
Yeah.
yeah, so that is also one of the reasons why I wanted to start interviewing lenders, like, just to get a better understanding of all the resources that are available, because I know each lender has some unique resource available that, a lot of times potential buyers aren't tapping into just because you don't know.
Mhm.
Um, and I know some, depending on like who you bank with and things of that nature, you might be more privy to the information that way. But just say you don't bank with that institution, you don't know.
Mhm.
So it's always good to find out more information, what is out there and what's available. And so
Yes,
that's
I strongly recommend that clients not only call, me to see what we could offer and to check other lenders to see what they
Mhm.
have to offer, because
Right,
they may have programs that I'm not aware of,
right.
because we
Or
do
just
have specific programs to WSFS
mhm,
Mortgage that
mhm,
other lenders don't have,
right.
and
Yeah.
that would be we have our Neighborhood Opportunity Program,
Mhm.
which is 3% down with no mortgage insurance.
Okay.
There is a there is a 620 score requirement and 3 that you have 3 active trade lines with
Mhm.
24 months, but if you don't have that, we can accept alternative credit. But that's a great program with 3% down, no monthly mortgage insurance, so it saves on the monthly payment.
Right.
We can, possibly link that to the WSFS grant, which is up to $5,000 towards
Mhm.
closing costs. We can use that in addition to First Front Door grant or Newcastle County or the City of Wilmington program. So we
Right.
can layer these programs. Um, but
And that
there
is
that's a
awesome.
good information to have your client speak to a couple of lenders to see what's available and what's out there.
Yes. But in addition to referring clients, I myself would like to, be more knowledgeable and informed as well, so I can also assist with the decisions that they are
Mhm,
making or even considering, just letting them know about the resources, not so much the decision that they make, but,
mhm,
giving them more resources, having more resources available, knowing where what direction to point them into,
mhm.
because again, like you said, excuse me, every lender is different and they all have unique, guidelines and unique programs.
Yeah. The First Front Door grant, that's one of my favorites, and that's only for banks. So
Oh, it's
the
only for
banks
them.
yeah,
Mhm.
the traditional lenders do not aren't eligible to participate.
Okay.
So it's through the bank, and it's through the Federal Home Loan Bank of Pittsburgh that we
Mhm.
have an agreement banks have an agreement with and are
Mhm.
able to submit applications on behalf of the clients, and they have 2 grant programs. Standard program is $15,000 grant money, and
Okay.
the KEYS grant program is 20,000. And if anyone's interested, Keisha does have a booklet that I
Yes.
provided that she can
Mhm.
send you that has all of the programs that are in Delaware that WSFS participates in addition to the 2 WSFS programs.
Yep. Mhm. Yeah. So,
And we can send that out that has all of the information for
yep.
the programs. And then with a discussion, we can determine which ones you qualify for and how we can possibly layer them to give you the best benefit.
Absolutely. And so you wanna this one is the neighborhood opportunity grant
Mhm.
program?
Yes, that's the one that's 3% down with no monthly
Yeah.
mortgage insurance.
Okay.
Depending on the property location, the census tract, it either will have an income guideline, a household income guideline, or if it's in a moderate income census tract, then there's no income limit on that
Mm,
program. The
okay.
grant program that you're showing now, that's up to $5,000. That does have a
Mhm.
household income limit, and it's based
Okay.
on the number of persons in the household. It
Right.
also, the property has to be in a certain census tract for that program. for the 5,000. We
Okay.
can That's the Delaware State Housing Authority program. That's
Okay.
for the whole state. Each
Mhm.
each program has different income limits based
Okay.
on welcome home, first-time buyers, or the Home Again, which is for first-time or repeat buyers.
Mhm.
That's a great program that we use quite a bit at WSFS. And then there's programs with the city, the county, City of
Right.
Dover, Sussex County, Newcastle County, so we're trying, and then I heard there's more programs coming through in 2026, but we can't announce it yet until they actually announce that
Oh,
there's other
nice.
grant programs that other nonprofits are trying to get out there for the assistance
Yeah,
because
that's
it's
amazing.
so needed right now.
Yes, yes. That's amazing. So when I have clients who, like to say things like, I kind of want to wait and see how the interest rates go before making a purchase. Like, how do you view that? Like, what is your perspective on that?
I say don't it doesn't matter what the interest rate is, I would say
Mhm.
buy as soon as you can.
Right.
Because if rates do drop, you do have the option to refinance into a lower interest rate.
Mhm.
But if you have the sources now to purchase, by all
Mhm.
means, start now and start
Right.
building your equity into that property. And if rates do, you're not going to keep probably this mortgage for as long as you have the home. You
Mhm.
Most people do either refinance to lower interest rate or refinance to take cash out of the property. It's very rare that you're going to hold that mortgage long term.
Right.
So I would
Mm.
say if you qualify now with current rates, by all means, purchase as soon as you can.
Mhm. Yeah, that's what I say as well. I mean, it's I think that, trying to catch the rate is just like a daunting task,
It could take
for
you
anyone.
years,
Yeah, it could
and
take
then
years.
your prices might go higher, and it could really impact if you wait a couple years, maybe programs won't be there that we have
Absolutely.
today.
Yeah,
So,
and you might miss the house that you really want because you're waiting for a rate. But also, I tell people, when the rates drop, now you're gonna have more competition in the market, because
mhm,
now everybody's gonna try and jump in and start to purchase as well. So, I would try to eliminate that competition
yeah,
myself and be able to have my choice or my pick of the litter.
yeah, I agree.
Yeah.
A lower interest rate will change your payment a little bit. It's not too much.
Mhm.
It's an eighth in rate is only approximately, I'm gonna say $15 a month in payment.
Mm.
So it does depend on the loan amount, that makes a significant change, but an eighth in rate is not a big difference.
Right.
Or, if you're waiting for it to drop a whole point, I mean, we might never get there. We
Yeah.
don't know what the future holds
Right.
with the economy and what they're going to do with interest rates. We may never see mid threes again, like where
Yeah.
we were.
Right.
So I kind of think we're in a new normal,
Yep. Mhm.
where they should be. Um, but
It's just so unpredictable. I just feel like, because it's so unpredictable, we don't know. You may be waiting forever, like,
correct.
to get something that's never gonna happen again.
Mhm. So if you're comfortable with the payment and you
Yeah.
qualify and using
Mhm.
programs available today, I would buy a home as soon as you can.
Mhm. Yeah, definitely, I agree. So with refinancing, do you see a lot of people financing now that some of the rates have dropped or
Well, the rates, we do have some that are inquiring about it now,
Mhm.
where they may have locked in last year, like 6.75, 7% kind of
Mhm.
rate. We are getting inquiries about that now to see if it's beneficial. And
Right.
typically, what I do, one, what is the reason for refinancing? So, what's the client's goal with a refinance? Are they looking to take cash out of the property? Are they just looking to lower their mortgage payment? So
Right.
then we can do an analysis and determine, is it beneficial to refinance?
Mhm.
I always look at what's the remaining term of the loan.
Mhm.
Have they been in the home for 5 years? Then I look at a 25-year term to
Okay.
refinance. If I can get their interest rate down, keep them on the same term, and lower their payment, yes, then it's a
Mhm.
win-win. Sometimes
Okay.
people, it doesn't matter the term, they might go back to a 30-year term to get a lower payment, monthly payment. So it really
Mhm.
depends on the needs of the client and the purpose
Okay.
of the refinance. Some have to
So,
refinance to get another
to
party off the loan,
yeah, that's another
you know,
reason. Yes,
like in
definitely.
divorce or things like that, where they have to get the other party off of the loan, and then they
Sure.
have to refinance. So they really, there's no choice, it has to be done to keep the home, but, if you're looking at, we definitely review numbers. Or if you need cash out, what
Mhm.
amount can you get cash out? What is your payment with cash out? And the lower interest rate. So
Mhm.
it's really a case by case basis, and it's reviewed like that, case by case to see if
Basic.
it's beneficial.
R Right, so also, for the refinance, right, you would also want the client to, stay in a home be in a home for a certain amount of time? Is it like a minimum or, like, is it like a parameter that you go by?
There is with, FHA, and I hate to say, I'm gonna go off memory.
Mhm.
I believe with FHA to refinance at 6 months.
Right, okay,
But typically I believe 12 months on cash out that you
okay.
have to own it. But I think those are the only 2 that pop up right now in my as far as, like, waiting before you can refinance.
And I think one other, detail that most people need to really, really remember before considering a refinance is that if they have any, like, DSHA grant or,
Correct. We
yeah,
look at any liens.
yeah, any liens, any additional second mortgages or anything like
Correct.
that on the, mortgage that
Because
that's
that may have to be paid, well, I can say the Delaware State Housing Authority
yeah,
second loan program has to be
mhm,
paid at the time of sale or
or
refinance.
refinance. Right,
So
yeah,
that would have to be taken into consideration, and that's why it's
definitely.
important, why it's a case-by-case basis,
Mhm,
because it
mhm.
may not even work, if
Yeah,
you have a new state loan last year, and then you have the second loan that you took with that program, you may not have enough equity in the home to be able to pay off both and get a
right,
lower interest rate.
right.
So
Yeah.
it's definitely, a case by per customer
Mhm. Case
scenario
by case scenario, yes.
that
Mhm,
we actually look into the recording documents to see if there's any retention agreements even,
mhm,
if they will subordinate,
mhm.
stay in second lien position.
Right.
I know the Delaware State will not subordinate and stay in
Mhm.
second lien position, but I will need to find that out for the City of Wilmington program
Hmm,
or the WSFS grant is a true grant, but the City of Wilmington program has a 10-year retention for the down payment portion only.
oh, okay,
So I can check with them and see if they will subordinate or if they have to be repaid. Because I know 1/10 is forgiven every year, and in
okay.
10 years, you don't owe any money on the city program, but
Mhm,
I would have to, I've not run into the subordination with them yet, so that's a
okay.
good question. I'll
Yeah,
definitely do my homework on that one.
yeah, no, that's a great question, yeah. So what do you feel about these new talks about that 50-year mortgage? I mean, what are your thoughts on that? I kinda think that I don't wanna have a debt for 50 years, like, me personally, I just don't I mean, I know it'll give you a cheaper payment and make it more affordable, but yeah, no, I just don't see myself.
I have mixed feelings on it. I kinda think, okay, remember when car loans were 3 or 4 years,
Mhm.
and now they have longer terms?
Yeah. Yeah.
because the price of the car got it was higher, and
Yes.
to make it affordable, now you have 7 is, I think, the common number of years, 6 or 7.
Yeah.
So I kinda think it's in that perspective.
Mhm.
Like we said earlier, you're not gonna have this mortgage forever.
Mhm.
If it's if the longer term does become available to help people get into a home because of prices, home
Mhm.
prices, then by all means, I say
To
to go forward
support
with
it.
it.
Mm.
There's no prepayment penalty, so you can prepay the loan at any time to
Mhm.
pay it on a 30-year term or less,
Yeah.
or whatever term that you'd like. But if
Mhm.
it's a way for you to qualify for that home, and if
Mhm.
that's the only way you qualify, I'm for it because I really feel like once you get into your home, then the homes appreciate. You're
Mhm.
applying monies to principal, maybe on a 50-year loan, it's not much to principal, but
Yeah.
you're still putting money towards principal, and you can always prepay on that loan, principal reduction with no penalties.
Yeah. That is true. Yeah.
So, I kinda
I
think of
think
the way
it's just
the car loans worked
yeah.
at one point, and now it seems everybody has a longer term car
I
note.
think it's just that I guess that 50-year number is just like I don't know. It does something to me. It's just too much. Even with a
Mhm,
car loan, 7 years, no, it's just way too much. I wouldn't sign up for that
mhm.
either.
Yeah.
So, I mean, but like you said, it's situational, and if that's the way that a person can obtain,
Mhm.
a house, then, maybe then and then they maybe be able to refinance and
Oh, sure, you can always
Mhm.
refinance, or you can
Mhm.
always pay additional principal to,
Mhm.
to pay it off in a certain depending on what your goal is. If you wanna pay your home off in 20 years, even now with a 30-year mortgage,
Right.
sometimes clients will say, "I really wanna pay this in 15 or 20." So
Mhm.
I would just send them, if you pay X dollars a month towards principal, you will accomplish your goal. So
Okay.
we run an amortization schedule of what your term
Mhm.
that you'd like to pay it off, and then, that would be, something that you can do on your own by paying extra to principal.
No, yeah, that is true. So in terms of military, so our VA clients, what do you all offer for them? Do you have any grants
We
for
have
them?
standard VA financing. VA
Mhm.
mortgage is one of the best mortgages out there, and
Mhm.
refinance the interest rate reduction loan.
Mhm.
The VA mortgages are the best, in my opinion. We offer standard VA financing. We can also offer VA financing with the Delaware State Housing Authority programs,
Okay.
so that you can get the state loan to help assist with closing costs.
Mhm.
For VA, sellers you can actually, if you can negotiate it, seller can pay all the buyer's closing costs
Mhm.
on a VA loan.
Mhm.
Um, or we can also link it with other programs, the VA loan with the WSFS grant, the First Front Door grant, or the State Housing Authority Second Loan Program.
Nice. That's great to know as well.
That's one of the
Um,
first questions that I ask every client. Have you ever served in the
served
US
in
military?
Mhm.
So we
Yes.
know, is that an option to
Right.
look at?
Right.
But
Absolutely.
VA has its own, sorry, I have some background noise.
No, you're fine.
VA has their own qualifying guideline.
Yeah. Mhm.
They not only look at debt to income ratios, like when we qualify, we look at the past payment plus debt divided by income.
Okay.
That's called the debt to income ratio. But
Mhm.
VA also has what's called a residual guideline. So
Okay.
they'll look at the income minus federal taxes, state taxes, and le debt, monthly debt, and depending on the people in the number of people in the household, you have
Mhm.
to have a certain residual. So not only do we do the debt to income ratio for qualifying, there's a residual calculation.
Okay.
So they just wanna make sure that the veteran has sufficient funds after they pay their mortgage to
Yes.
still be able to buy food or
Yeah,
have
sustain. Yeah.
standard living expenses.
Mhm. Yeah,
So,
absolutely.
but but the VA mortgage is one of the best out there. Actually, you know, they are, even though all loans are technically owned by the government,
Mhm,
FHA, USDA, um, VA, the Fannie Mae and Freddie Mac, the conventional ones, are also owned by the government. So,
mhm.
but the WSFS program is unique to WSFS. We use our own funding for that. They don't get sold in the secondary market to the federal government.
And it's not a second lien, and it's an actual grant,
It's
right?
yeah. Mhm.
Yeah, that's what I like about it. It's not a second lien that's on
Mhm.
your,
It's an actual grant, and the first front door is an actual grant.
right, so no
So there's
repayment.
no liens on I'm sorry, one of the first front doors, the standard, has a 5-year retention.
Okay.
The keys has no retention period, but the
Mhm.
standard first front door does have a 5-year retention.
And just say somebody said, "Oh, well, had a circumstance where they needed to sell within that 5 years," is a payment penalty, correct?
Well, 1/5 is forgiven every year, so
Mhm.
depending on what year that's sold within the 5 years, they may have to pay monies back to
Yeah.
that program.
Right, and this is very important to know,
Mhm.
and things happen, divorce,
Mhm.
loss of a job, so many different lifestyle changes can come about that you were unforeseen, and then you can't afford it, so,
Mhm.
those things are good to know. I think that, also with those unforeseen challenges that a lot of homeowners or just people in general face, I think that brings about that fear of, a commitment of buying a house,
Mhm.
because purchasing a home is probably the largest commitment you're going to make in your lifetime and,
Mhm.
well, financial commitment. So, I think some people are very apprehensive about it because of that and just the unknown, but
Mhm.
it's just important to have these discussions to highlight those items, so that you're aware and conscious of it. So if something comes about, now you know how to handle it.
Mhm.
Yeah,
Yeah, but I think buying a home is the most rewarding thing that you can do,
I agree.
and benefit that you can do for yourself and your family.
Yes.
We've only owned 2 homes, but the very first home that we bought, we sold it and used the equity to purchase the home that we're in now. And
Mhm.
then, like you said, there's situations where you do a cash out refinance for certain
Mhm.
purposes,
Mhm.
and that equity in your home actually helps you through these different life stages.
Right.
Whether or not your child's going to college and you need funds for
Mhm.
that, or,
Mhm.
so it's been a true blessing to own a home and to be able to tap into that equity if needed,
Mhm.
or just to know that your payment is secure if it's a fixed interest rate.
Yeah.
The principal and interest won't change on that loan payment. The only thing that will change, though, would be your taxes and
Taxes, I was
insurance.
about to say the taxes is
Yeah,
the
'cause
only. Yeah.
every year you get an escrow analysis, and it will always be 1/12 of the current homeowner's insurance and 1/12 of the current taxes that will
Mhm.
be added to your payment if you have an escrow. So
Mm.
that portion of your payment will increase.
Right. Right.
And if you do have a loan with mortgage insurance, if it's a conventional loan, mortgage insurance will drop off at some point. It's an automatic fall off once you have 22% equity for
Mhm.
conventional. But if you have an FHA mortgage, it all depends on how much money you put down. Typically, if you put down the least amount of 3.5%, you're
Mhm.
going to have mortgage insurance for the life of that loan.
Okay.
But every year, FHA will reduce it based on the current principal balance. So
Mhm.
the monthly mortgage insurance for FHA will decrease every year, but it
Okay.
won't fall off unless you have a larger down payment in the beginning.
Got
I
it.
think it's 10% down, it'll fall off in year 11.
Oh, nice.
So
That's
the
nice to know.
mortgage insurance insures the lender if you go into default,
Right.
and it is required for conventional unless you put 20% down,
Mhm.
or use the WSFS Neighborhood Opportunity Program where it's not required to have. And FHA has monthly mortgage insurance, USDA,
Mhm.
and The VA does not. The VA mortgages only have the upfront VA funding fee that's
Mhm.
financed into the loan, and if that VA buyer is receiving VA disability, possibly may not even have to pay the VA funding fee.
Oh, nice, nice.
Mhm.
Oh, one other thing I wanted to touch on is that USDA program. Can you tell us more about that?
Well, there's USDA direct, and then there's
Okay,
USDA guaranteed. The
okay.
USDA guaranteed are what all the lenders participate in, and that's standard. The home has to be in a rural area,
Mhm,
and it's 0% down, but you do
mhm.
have an upfront mortgage insurance premium that's financed and a monthly mortgage insurance, which is pretty cheap, but a USDA loan is, cannot be pretty much Route 72, Newcastle County and south
Okay.
has areas that are fall under USDA. So think of rural, but
Mhm.
the town of Middletown is excluded, the town of Smyrna is excluded, and the town of Dover, like around the city of Dover, is excluded because of
Oh,
it has a high population. So it's based on the population area, but there is a site that we put in a property address to determine if you're eligible for USDA.
mhm.
It's a great program, but they're very strict on the debt to income ratio
Oh,
of
okay.
for the guaranteed. Now,
Mhm.
USDA also has what's called a direct program. Lenders do not participate in that. The
Okay. So what's that?
USDA direct is where the client goes through, neighborhood partners
Mhm.
in Delaware and Dover, and they can apply with direct with neighborhood partners, and I think there's Milford Housing also participates. But that's where you make application and your payment they can actually buy that rate down, and your payment is based on your income.
Mm,
So it doesn't have the standard qualifying ratios that we
mhm.
lenders look at.
Okay.
Those programs are out there. There is a waiting period that I was told recently for
Okay.
that type of funding because it's through the USDA, program direct. So I don't have any unfortunately, I don't can't discuss that program because we don't participate. Lenders
Right.
don't
No,
participate.
understood. Yeah. But could
But
you say what neighborhood, partner is?
Neighborhood Partners is a nonprofit housing counseling program,
Mhm.
and they have offices in all 3 counties,
Okay.
and they are actually a HUD-approved counselor, and they are the ones that participate with USDA Direct.
Mm,
So there's
okay.
a contact there that works with the client to obtain those funds.
Nice.
It's a good
Okay.
way to for a client to purchase a higher priced home depending
Mhm.
on their income. There are certain restrictions and guidelines, but I know that I've sent multiple within my career, multiple clients,
Mhm.
a lot of single moms to that program to be able
Mhm.
to get into a home. And every year, your income is analyzed every year under that program to determine
Mhm.
if your mortgage payment will change. So
M'kay.
it doesn't work like your standard mortgage where your principal balance is going down every month.
Mhm.
So it's called, oh shoot, I just forgot what it was called, but sometimes the principal balance may increase on that program. So if a client's not paying the full payment based on their income,
Mm.
the principal balance may increase. So definitely if you're interested in that, I would say to reach out to neighborhood partners for
Yeah.
USDA direct, but the
Mhm.
lenders participate in USDA guaranteed, and it works
Right.
just like standard mortgage where your principal balance is going down and you do have to qualify with certain debt to income guidelines.
Okay. And one last question before we go. I know you mentioned before during our conversation prior to us getting on the live that WS is a low cost lender. Could you
Yes,
kind of like elaborate on that?
thank you. Yes, WSFS. only charges $595 for the lender fee.
Mm,
You do have to pay for an appraisal, but as far as the lender fees, we
mhm.
only charge $595 for purchases and, $795 for refinances.
Okay.
Now, if you have the mortgage payment auto-drafted from an existing or new WSFS bank account, we
Mhm.
will waive $595. So on a purchase, there are no lender fees if you opt to have your mortgage auto-drafted,
AutoPay,
or
yes.
for a refinance, it would be $295. There would be a
Nice.
$595 credit. So we are a very low-cost lender. We also do not charge for the Delaware State Housing Authority program. Some lenders charge a half a point to
Oh,
participate in that program, and we do waive that fee for our clients.
that's very nice.
Mm,
Yeah.
'cause
Yeah, all those little fees add up, and before you know it, you're looking at your CD
we could
like,
be talking a few thousand dollars
yeah,
that
yeah.
between lenders.
Mhm.
So, yes, we are a low-cost lender because we do care about our community, and we want to be able to offer the best pricing and to get into the home with the least amount possible.
Absolutely, absolutely. More in their pocket.
Mhm.
Yeah. Well, Marianne, it was so great talking to you today. I really appreciate your time. I really appreciate you sharing all your knowledge. And hopefully we can do this again soon.
Yes, I definitely hoped we can do this again, and I thank you very much for having me on your on on the show. Thanks.
Yes, absolutely. All right. Well, if you guys need any further information from myself or from Marianne, please feel free to DM me. And I can put you in direct contact with Marianne if you need any support or have any additional questions. Don't hesitate to DM me if you missed a live. We can always, set up a call, set up a Zoom, whatever is comfortable for you to get you the information and resources you need. All right. Thank
Thank
you.
you.